Felix here, summer rally no more. But what do you need to be aware of going into the next week? One big event happening next week, but you also need to understand what's driving this change. What was that fake bull rally on Friday all about? Why did it come back down? What's going to happen next week? That's what I intend to walk you through here. Before we do that, make sure you get your mittens, your paws, your hands even on felixfriends.org/top15. That's Goldman's list of top 15 beaten down stocks. It's a beautiful benchmark that looks just like this. In fact, it is this. And you can look at things like return on invested capital, ROIC, hugely important. Look at long-term earnings growth. Look at their consistency of earnings per share. That's what I would start with. So dig around on that. It'll make you a smarter investor, which is the entire purpose of this community. So check it out. Of course, none of the following is financial advice. You know that by now, don't you? And you know how lovely those disclaimers are that we've got. Right, so what's going on here? Well, the summer rally is no more. Sadly, we, had high hopes and we came back down. What happened on Friday? Well, on Friday, we got the first increase in the unemployment rate to 3.7%, significantly more than the estimated 3.5%. But you can see it's still pretty low, right? Historically, really, really, really very low. So why did it happen? And why did the market sort of go, yeah, that's good, but then it wasn't? Because the market looked at the rate, they thought that's exciting. Higher unemployment should mean the Fed need to do less. But then when you dug a little deeper into the data, as we did on Friday, you saw that the participation rate had gone up. The Fed likes the participation rate to go up, but this doesn't really mean that more people lost their jobs. All that happens is that more people entered the job market, were available to go back to gray, gloomy cubicles, and therefore that in itself had a bit of an impact here. So it's good that that's coming back up. It's still not quite near the top of where we were, and I just think it's too little an impact here. Labor force dropouts are basically returning here to job seekers. A record share of unemployed came from outside labor force in August here. So you can see that recovering. And that's a good thing, but it's not like massive, really. Now, much, much more important, I would say, is the fact that we know the stock market's falling. And that's not really a surprise to us, right? Stocks are tanking, but bonds are falling at the same time. Now, anybody who's ever talked to a financial advisor was told you should have, 30% in bonds or something, 70% in stocks or some sort of metric like that, because bonds will rally when your stocks go down. Well, not anymore. That seems to be over. Here it is. It's the end of the bond rally. This has been a 2-decade fact, and it's over. And what does that mean? Well, yields are going up. And it's just, I think this has been artificial. The Fed has been, with its money printing and bond buying, keeping yields down. Yields are shooting back up and therefore tanking the bond market alongside with it. So what should you be doing in this scenario here? Before we look at some more important facts, I've also got something quite amusing for you, I think. I hope you find it amusing. Focus on fundamentals, I say. It's a great time to buy stocks when the market's depressed, when the market's miserable. How do you know what kind of stocks to buy? Use a stock tracker, like something like this. You can put in any old names you want, hit the update button. This is the one we have on our Patreon, but you might be able to find some others online. And what does it tell you? Well, look at gross margins, right? Especially in times of inflation, gross margins are super important. Look at ROE numbers. I'm just going to hit the stop button here. Look at long-term earnings per share growth. Why is that important? Because what you really care about is how much you are making as a shareholder. So dilution kind of gets factored in here. The sheet's still updating. I thought I pressed cancel. The sheet's got a life of its own. It's taken over. This is what happens when AI is alive. Institutional ownership, it's an interesting one. If you are in a growth stock, sales growth is going to be there. Look at PE versus forward PE. You want the forward PE to be lower than the current PE. Otherwise, they're doing something wrong. So that'll also help you to find companies where you can essentially buy them at pretty much any price. The forward PE. If the earnings are very, very strong, then that's typically a good buy. So check it out. Go to felixfriends.org/Patreon. Links down below. It's about 20 cents a day or so. Join us for the year. You get an extra month off as well. And that's a really good place to start for doing a benchmark. You can, of course, also, we make lots of money. This is me yesterday, literally my options portfolio yesterday. Yesterday, the P&L opened at the end of the day was $513, which is pretty nice for one day at work, because most of these trades, or the ones with the 7 here, I set up literally the day before on a live stream with the coaching community. And the ones that are looking a bit red and miserable here, that's fine, because we've got a week left and they are actually making profit. It's time expiry that's required here. So it's a bit of a tricky one for options. But really, what's going to happen here on Thursday? Well, on Thursday, after you've enrolled in the Master Options program, links down below, take advantage of that coupon code, Build Wealth. It's expiring at the end of the Labor weekend. Not only do we get jobless claims again on Thursday, but the J. Powell is speaking at 9:10 a.m. Eastern, or 3:10 p.m. Monaco time, and he's going to talk for 40 minutes. I will do my utmost to live stream that and give you commentary along the way to see what's going on there. That's a big event for the market when that man opens his mouth. Now, this is something a bit more amusing. If you're wondering why Mullen is up, well, Mullen is partnered with a company that's invented this. It'll suck moisture out of the air and you'll be able to drink it in your car. Genius, isn't it? Do you know what it reminds me of? A dehumidifier. They've basically put a dehumidifier in the vehicle. It's not a great invention. I can't see how this is worth $1 of value add. Yeah, it might be nice to have drinking water in the car, but I mean, come on. Like, if you are pinching this, what's next? I mean, a timeshare of a gold mine or something. This is just idiocy. But anyway, it is quite amusing. European Union and Gazprom are continuing to fall out. Russia has not turned back on the major pipeline into Europe, Nord Stream 1. Why? Well, they're saying there is an oil leak, but apparently it's minor. Siemens, who are providing these turbines, say what Gazprom has found didn't justify cutting the gas, which is also what the German grid says. And why have they really done it? Well, this is the gas price in Europe. And did you see that? It came down. And the Russians didn't like that because they like to get a lot of money for their gas. So they've just turned the turbine off and wait for Monday. Gas prices are going to go through the roof again. That's the power they have over European gas prices. European gas prices are still at about 4 times where they were pre-conflict. So very, very profitable. Now here's Winston and his new best friend. This guy is 6 months old. Isn't he sweet? He's really lovely. He's about doubled in size in the last 2 weeks, I think. So he's very, very sweet. We wish you a good start to the week. If you enjoyed this video, you know what to do. And what I'd also highly recommend is that you click on this next one here. I'll put a link out to the next True Insight to really make sure you understand the market and the developments and the macro here. It's all macro at the moment. So take it from an old macro economist, former banker, former lawyer, and all that sort of stuff. And, someone who pulls on fluffy ears. I thank you for watching and see you on the next one.